Welcome back, guys. Today I'll be explaining income tax, and then next week I'll be looking at an example. Let's get started.
An income tax is a tax imposed on individuals or entities in respect of the country or profits earned by them.
In most Caribbean countries, income tax is levied by the Board of Inland Revenue and is a large source of revenue for the government. So we'll hear about income tax. If an individual earns an income which is less than or equal to a minimum amount, so I'm sure you heard minimum wage, then he does not have to pay income tax. So if you have less than or equal to the minimum amount, then there's no need to pay income tax. If, however, an individual earns an income which is greater than the minimum amount, then he has to pay the income tax. So it's based on your country to determine if you pay your income tax. The total amount of money a person earns before income tax is our gross income. So the gross income for an individual, also known as gross pay, when it's on a paycheck, is an individual total earnings before taxes or other deductions. Now, some persons get allowances, which are like benefits. So an allowance is that part of the gross income that is non-taxable. So sometimes you'll hear non-taxable income or tax-free income. So we have personal allowance for the income earner. So this amount you cannot be taxed on. Your personal allowance is the amount of income each individual is entitled to receive each year that is tax-free. So that's our personal allowance. We also have our spouse for those who are married. So the spousal allowance, it differs in each country. Who is qualified based on your country? But the allowance is a superior claim and will be paid out, and it is paid out to the other partner. And as I have here, an allowance for the husband or wife who is not working. As I said, it differs for everywhere you go, so you'll have to know the rules based on the country you're at. But that's a benefit. We have child allowance, the allowance for the children that are at school, whichever school they attend. We have children allowance. There are more. We have the national insurance allowance. And for this allowance, it is also considered non-taxable, can be taxed. And it differs based on where persons are. But the national insurance allowance is an allowance for the national insurance payment made. Now we also have insurance premium allowance. So the insurance premium allowance, an allowance for the premiums paid on a whole. So the insurance allowance is a maximum amount of plan will be paid for covered health care. Now, it may also be eligible expense, payment allowance, or negotiated rate. You also have the dependent relative allowance. So if you have a dependent relative, then this allowance is for them. So we call it the dependent relative allowance. So this is a relative, including a relative of your spouse, or a civil partner who is unable to maintain themselves as a result of old age or ill health. So the dependent relative will be someone who is either old or has some health conditions. That's what we call dependent relative. So we have credit union shares allowance. This is the allowance for the purchase of credit union shares, and this is considered to be non-taxable. Unlike most financial institutions, credit unions do not issue stock or pay dividends to outside stockholders. Instead, earnings are returned to members in the form of lower loan rates, higher interest on deposits, lower fees, and enhanced technology and convenience. What does it mean to have shares in the credit union? A divided up unit of the value of company. Owning shares qualifies you to become a member of the credit union. It is an investment that produces long-term return. Now, we have the government bond allowance. An allowance for the purchase of government bonds. What do we call government bonds? So, a government bond is a form of security sold by the government. It is called a fixed income security because it's earned a fixed amount of interest every year for the duration of the bond. The purpose of the government bond is to raise money to operate the government and to pay down debt. No. The last one is a mortgage interest allowance. An allowance for the interest paid to a bank for the purchase of a house. Now, to get the taxable income, we talk about the gross income. The gross is everything. You have your allowance, income tax hasn't been removed. So the taxable income is a gross income minus the tax-free income. That's allowance. So the gross income, you have to remove the allowance because this is not taxable. So that's why we have to remove it. So taxable income is gross income minus the total tax-free income. The net income is a gross income minus the tax paid.
Thanks for watching, guys. Don't forget to like and subscribe. Next week, I'll be doing activities on income tax. Stay tuned.